Hi, I'm Rod Stone from Stone Accounting and Business Advisory. Today we're going to talk about self-managed superannuation funds. I'm going to run through some of the benefits of having a self-managed super fund as opposed to a managed fund or an industry fund. And one of the first big advantages is investment choice. So when you've got a self-managed superannuation fund, you can choose exactly what you want to invest in. Whether that's shares, property, or cash investments, you can have that choice. In a managed environment or in an industry fund, the fund managers and administrators, they make choices that are very broad, that really are generally applied to the thousands and thousands of members that are within those funds. For example, you might get a choice between a conservative, moderate, or a growth model, which is applied to every member. In self-managed superannuation, you choose what assets you want to buy and invest in, and you can tailor those exactly to you. For example, business owners can purchase the property that they run their business from, and the self-managed super fund then can rent that back to the business owner. And that's a really common strategy, and it's a really popular one with business owners. The second benefit is a self-managed super fund can borrow money from a bank to purchase property. Now that's through a limited recourse loan, which all banks offer these days. And what it means is that if you want to buy a property worth, say, $400,000, and you've only got $200,000 in your super fund, you can borrow the other $200,000 from a bank. So that gives you that leverage, and it's really attractive, particularly again for those business owners that want to buy their own premises that they operate in. One really important thing to note is the sole purpose test. The sole purpose of superannuation is to provide benefits to the members in their retirement. So we need to be really careful about what we can invest in. There are lots of rules, sure. For example, if you buy a residential property, the members can't go and live in that residential property because they would be receiving a benefit prior to their retirement. Other benefits are tax. The big one is tax. So when you invest personally, and you might buy shares, or you might have interest on cash investments, or you might get some rental income, generally you're paying about 30 to 45%, depending on your tax rates. So any income or net income you earn off those investments, you're paying about 30 to 45%. In the superannuation environment, if you buy those investments in the superannuation environment, your tax rate is somewhere between 0%, that's right, 0% and 15%. So we're all trying to get these tax benefits when we do our tax finalisations and tax returns, but one of the biggest benefits we can get is by investing within our superannuation. And the only way that you can have control over your investing is in a self-managed superannuation environment. So getting away from those 30 to 45% tax brackets and getting exposed to a 0 to 15% bracket is extraordinarily attractive. Other things like if you want to shift your superannuation from an accumulation phase to a pension phase, in a managed environment, all of your assets have to be sold and then repurchased again. They have to be sold to exit the accumulation phase and repurchased when you enter the pension phase. That then triggers brokerage costs, administration costs, and most of the time capital gains tax costs. In a self-managed superannuation environment, you don't have that. It's a seamless and smooth transition from accumulation to pension. So what that means is that in an accumulation phase, that's when we're generally a bit younger, we're accumulating super, we're not allowed to access our super or access any of the concessions to get an income stream, and we're accumulating our wealth. When we reach generally about 55 and onwards, there may be situations where you can start to get an income stream from your superannuation, and that's when you transition over to a pension phase. So that transition under self-managed super is much smoother and less costly as well. The other thing is your insurances. In superannuation, you can have life insurances and TPDs and things like that. When you're in a managed environment, you've got a choice of generally one option, and that is the life insurance or the TPD insurance or income protection insurance that is applicable to that fund that you're in. When you're in a self-managed superannuation environment, you can tailor your life insurance to you. Things that are really important to you, you can work with the insurance provider and get those tailored specific to you. So that's another big advantage as you pay a bit more attention to your superannuation. So they're the main advantages. There's lots and lots of rules around self-managed super. We have to be careful. There's a lot of compliance activity that we need to do. But generally, there's a lot of benefits there. And if you've got, we generally say between $200,000 and $300,000 in your superannuation fund, then it's worthwhile having a very good look at whether that's a good option for you. The reason for that is that under a managed environment, the fees that you pay, and a lot of them you don't see, they're based on your fund balance, and generally it's a percentage that's applied to your fund balance. So it's a variable cost. As your fund balance goes up, the fees go up. In a self-managed environment, most of the fees are fixed. So it doesn't matter how much you've got, whether you've got $10 or $1 million, most of the fees are fixed. And then those fees become reasonable when compared to managed options, when you've got about $200,000 to $300,000 in there. So that's about the threshold that we look at. So self-managed super can be a really attractive environment, particularly considering that all of those specific tax strategies, specific life insurance policies, and specific investment choices that you can make can tap into all of the tax advantages, concessions that you can get, and they can be tailored just for you. And that compounding effect each year is how a lot of people get ahead in superannuation, and how they can take back control and have a much healthier nest egg there when they reach retirement. So if you want to ask more questions, obviously this is just scratch the surface of this topic. If you've got questions, or if you want to talk specifically about your circumstances, we're always here to help. Contact us, send us a comment, a direct message, or an email if you want to find out more. Thank you.